Hello, so now we move on to part 3b. And in part 3b of price, we're going to be now looking at candlesticks and timeframes. So understanding more about how price is represented on a chart instead of just the monetary figure or the pip value figure that we previously learned. So how is price represented then on a chart? Let's bring up a chart. Now this is one we looked at earlier when we looked at the change in the pip value and making a profit from that. We slightly kind of zoomed out a bit. And if we look at these bars here, right, just identify a section of this chart. What are these colors on this chart, right? And they're going to be different colors. Some people will have green and red. Some people have black and white. I've got blue and white. You can have whichever color you want, but they represent a change in the direction of price over a certain time. So zooming into those candles, we can see here that some are white, some are blue, and they're going up and down over time. So as the axis on the bottom goes from left to right, these new bars are forming. Remember in part A as well, we looked at how there was 56 minutes until the next candle opened. So each one of these candles then can represent a different time period, but let's say in this case they represent 1 hour. So every single time that the hour strikes the next hour, a new candle will form. It will go slightly to the right. So you can see, let's say the past 4 candles there, if you look from right to left, represent 4 hours of price action. Now, how can we actually read these candles? What do they represent? And they're going up and down, but what do they actually mean? So we have to look at what a candlestick is. Now, if you look at this diagram, and don't worry, we'll look at this again in more depth in a second, back on that chart. It's quite a simple thing, really. It shows you the open, the high, the low, and the close of the candle, the close of that time frame. So let's say that this was a 1 hour candle like before. The bottom of the candle completely, so you've got the body and you have the wicks at the top and the bottom. The bottom of that wick is the lowest price that was reached during that hour that the candlestick represents. And then you have the next part up, which is the open of the body. So if it's green, it means it starts on the bottom, goes up, closes at the high. Therefore, the bottom of that body is signifying the price at which the candlestick opened. So it opened at that price, it could have gone down a little bit. Therefore, you have the wick at the bottom. Let's say it goes up really high. So switching to the top, you can see you have got the top of the wick here. That is signifying the highest price that was reached during the time period of the candlestick. So during the hour, that was the highest price that was reached. And then the next one down, the close of the body. So where that body stops, the next candle opens. And that's signifying the price at which that candlestick closed. So during that 1 hour time frame, or daily or weekly, this is showing the open price, the low, the high, and the close. So let's take this now onto that chart we just looked at and see how that works. So let's have a look at one of these candles then. So here we have the open of that candle. It's white, therefore it's bullish in this instance. And that could be green on some charts. That's the open price of the candle. That's the low, so the lowest point at which price reached during the hour. That's the highest point, or the high of the wick. And then that is the close point. What if it's bearish then? If this goes downwards, that's a candle going upwards. What about a candle that goes down? You simply flip it on its head. So therefore, the top of this candle is the open because it starts here and goes down. The previous one started lower, closed higher. That's the open of the candle. That's the lowest point price reached. That's the highest point price reached during that time period, and it closes here. And you'll notice how the next candle opens, which is the high point because it's a candle going down, opens where the previous one closes. It goes down very slightly. It's a very small body. It goes up and down during the session. You've got big wicks, but it goes down very slightly. And then where that down candlestick closes, the up candlestick, the white one, opens in that place, then goes low, goes high, and closes higher, so on and so forth. So each one connects where the open and the close is based on whether it's an up or down candle. And of course, if you're brand new to this, you can study that chart and understand that after not too long. So what about time frames? Because I've mentioned hourly, I've mentioned daily and weekly, etc., etc. And different candlesticks can represent different periods in time. So far we've looked at hourly candlesticks, but you can really have any time frame. You can even customize it on certain platforms and have like a 13-minute per candle sort of thing. But the main ones we'll look at hourly, 4 hour, daily, weekly, monthly, etc. So the sort of like sensible timescales. If you trade on a 13-minute time frame, Not many people are looking at that, but everyone wants to know what happened during yesterday or today. So let's look at this chart here. Now, this is a 1 hour time frame. How do we know this? You can go to the top left here. This is again trading view, and see the time frames along the top. So if we zoom into this, we have 1 hour, 4 hour, or 4H, 1H, 4H indicating the hour, DWM, day, week, month, and the one highlighted, so the one that's highlighted blue, is the current time frame, which is the 1 hour chart. So we know that every single one of those candlesticks on the main chart there represents 1 hour of price action. And of course, we know the open, high, low, close, because we can see that represented by the body and wick of the candlesticks. So here's an hourly time frame. What would that look like on a higher time frame? Because you can imagine that if you have 24 hours of price action, right? Price action being just the movement of the chart, the movement of the candlesticks. 24 of these hourly bars equals 1 bar on a daily time frame, because it's what it's made up of, right? Therefore, one candle here is 1 hour. This is a daily time frame. And by the way, this is the same chart, and we'll see this in a second. So what does that price action, what do those hourly candles on the left represent? Which bar do they represent on the right? All of those represent that bar, because 24 of those hourly candles are one daily candle. And you can actually see, if you sort of study how it looks. So the daily chart, if you look at, remember the open, the high, the low, the close, it opens very low because the previous candle was blue, which in this case is a down candle, opens quite low, goes very high during the session because the high of the wick is the high point. It then obviously goes all the way down again because there's also a low wick, and then closes slightly higher than it opened. So it went really high during the session, went quite down during the session, and then went slightly up to close. And if you look at the left-hand side, it does exactly that. So it opens quite low, goes up, goes back down again in like a sort of upside down V shape, and then goes up slightly at the end. So you can see how the hourly candles there represent that daily candlestick. What if we then went even broader? So here, one candle equals 1 day. Now, what does this look like on a weekly time frame? It's the same thing again. So every time you do this, you can also do it the opposite way around. And obviously you don't know exactly what it will look like, but you can sort of have a guess. But going here from the low to the up, so from the daily to the weekly, we can see on the right-hand side here, one candle equals 1 week. You have 5 candles here. So previously we had 24 candles because there's 24 hours in a day. You might be thinking, well, there's 7 days in a week. But remember that the FX market is only open 5 days a week. So opening Sunday is GMT time, 10 p.m., closing Friday at 10 p.m. So therefore, there's only 5 trading days in a week. And if we then look at what does that represent, well, that's the candle that those daily candlesticks represent. And again, if we try and figure out why that is, if that makes sense, well, if you look at the weekly candle first on the right-hand side, you open and then you close lower than what you opened. Hence, it's a down candle, a bearish candle. You also have a high point where the market went up after it had already opened. It then went down slightly. That's where you have a downside wick, and then closed just up from that low. But it's definitely closing lower than it started. Now look at the left-hand side. Well, previously, you can see the previous candle was an up candle. It's white, and you can see that represented on the left-hand side before the daily red box, where the price went up. Then it opened. It went up slightly for 1 or 2 days, which is the upside wick. It then went down quite strong, which is the sort of down movement of that weekly candle, and then closed slightly higher than where it was at the bottom. So that makes sense that daily candle translates into that weekly candle on the right. So this is essentially multiple time frame analysis. And we'll go into something later called top down, where we can actually use this to sort of help us to try and predict movement. So it's called top down analysis. So looking higher, then delving deeper, then delving deeper, delving deeper. And these various time frames can help us do that.